Welcome, everyone. Thank you for joining for this live Q&A and live stream COVID-19 edition. Obviously, pretty hard times for everyone in the world right now. And normally at this point, we'd be doing a webinar like this, a Q&A, just about April 15th, tax day, how to file your taxes. But with all the questions that there are around COVID-19 finances, stimulus checks, unemployment, sick pay, all these different things. We wanted to really dedicate this time to helping answer a lot of those questions for you. So a lot of you have asked different questions when you were filling out the RSVP form. We'll get to a lot of those. We've compiled answers to a lot of those. If you have any new questions as we go on, I encourage you to make this interactive by using the chat. Anything that Knox or I say that's not clear, we want to make this interactive. We want to make this for you to feel more in control, and hopefully, I feel a little bit better and more at ease as we go through these difficult times. So yeah. Without further ado, let's get into it. So here's the agenda for today. So yeah, we'll do quick introductions of myself and Knox, and then we'll get right into the top questions that y'all have been wondering about related to COVID. And then we'll also do some of the normal tax stuff that we normally would do. And then we'll leave you with some additional resources that we think could be helpful. So yeah, for intros, I'm Hako from Everlance. A lot of you probably know what Everlance is, but really quickly, we are an automatic mileage and expense tracking app. So why are we talking about COVID-19? Well, we deal with taxes and finances for independent contractors across the gig economy. So we know a lot about this stuff, and we want to help you with everything to do with taxes and finances. So we have this app that helps you with mileage tracking, with your taxes. We want to help you across. So this is why we're doing this for you. Okay, next slide. A little bit how the app works, but we're just gonna jump into it. So let's go. And then Knox, really honored to be joined here by Knox. He's one of the nation's foremost tax experts. So we're all super lucky to have him here breaking things down for us. And yeah, Knox, I'll let you introduce yourself a little bit more before we dive in.
Cool. Yeah, so basically I'm Knox. I have been in the tax business a long time, and part of my job is helping to implement when new legislation comes down with the IRS and with the Department of Treasury. So I'm kind of one of those nerds that lives and breathes this stuff. But I also have a real passion for helping the everyday person being able to navigate what can often be scary and what can be a little complex. So that's who I am, and that's why we're here today. And our hope is that if you have any questions, as Hako said, throw those into the chat, and we're this time is for you. So we're going to answer whatever questions you have, and then we're going to try to present to you what we feel like is important information for you to get. But in many ways, you all get to drive what we're doing today in terms of telling us what is important, what's on your mind, what's on the mind of Dashers, and those are the things we want to answer. So yeah.
Terrific. And I just want to call out, I'm already seeing some great questions from Trina, from Titku. So cool. And the way we'll do some of this is Knox is our expert, so I will ask him some of the questions, and then he'll give us like the expert opinion. He's really good too at breaking it down for, like he said, for the everyday people like us, and then I'll help to try to make sure that we're getting it. So cool. So the first thing that a lot of people are wondering about is these rebate checks or these stimulus checks, as different terms for them. When am I going to get them? How much are they going to be for? Do I need to do anything to get them? Do I need to file my taxes to get them? So we're going to go through all these questions, and we're going to start with the top question is, how much should I expect to get? So Knox.
Yeah, so obviously this has been all over the media, but there's also been some real confusion, and I noticed we already have a couple of questions in here that relate to this, so that's great. So just real high level, if you are a single person and you are not claimed on someone else's return, then you're going to get $1,200 in most cases. Now, one of the questions that I noticed is, well, what about if I owe the IRS am I going to be able to get a stimulus check? And the great news is, yes, you will still be able to get a stimulus check. There's only one thing that they will hold your stimulus check for, and that is back due child support. So if you have back due child support, then they are going to hold your check until those obligations are met. But outside of that, Congress basically is not allowing the IRS to hold these checks for any other reason, assuming you meet all of the stipulations. And we'll talk about that in just a moment. But basically, a single person, $1,200. If you're married filing joint, $2,400. If you're head of household, that's $1,200 because you're really filing as single. But then you also get $500 for each child that you have under the age of 17. So that acts a lot like the child tax credit that you might have heard about. But if you have children who are under the age of 17 that are claimed as a dependent on your return, then you're going to get the $500 for each additional child. So be aware of that. What about Knox if they're 17? Notice it said child under 17. So no benefit whatsoever for a child who's 17, no benefit whatsoever for a child who is in college. If they are a dependent on your return, you only get it if they're below 17. And the bad news for the college kid is if they're a dependent on your return, they do not get it themselves, even if they file a return themselves, but you claim their dependency, they're just getting their withholdings back. They don't get a stimulus check at all. So if you claim them on your return, then they don't get a stimulus check. So there's going to be some confusion about that, but you need to be aware of that. It's all about who is claiming the individual on that return in terms of who's going to get that check. So single person, $1,200, assuming they're not claimed as a dependent on someone else's return. Married filing joint, $2,400. Head of household, $1,200. But then there's that additional $500 for each child under the age of 17. So that's kind of the bottom line of how that works. That common question here is, okay, Knox, what are they going to look at? I haven't filed my 2019 yet. Is that going to be okay? And the answer to that is yes, assuming you filed your 2018. So if you filed your 2018, good to go. They're going to base it on your 2018 return. If you have filed your 2019 return, they're going to base it on your 2019 return. So they're going to base it on your most recently filed return, but they'll only go back to either 18 or 19. So if you have not filed either 18 or 19 yet, you need to get busy quick and get those filed, because if you don't have it filed, you're not going to get a check. So that's the other thing to kind of be aware of. And we are expecting, we're already seeing a lot of calls from people that are saying, hey, I haven't filed my 18 or 19. Can you prioritize us? And we actually are prioritizing those returns right now. Maybe that's right, maybe that's wrong, but we're prioritizing those returns to help people get their stimulus checks because we know people need them. So, but hopefully that helps to clarify. Now you can use us, but you don't have to. You can go to TurboTax or Tax Act or anywhere else. In fact, Hako's going to tell you about a free option coming up a little later. I won't steal his thunder, but there are places that you can go and get those filed. The important thing is make sure if you have not filed 18 or 19, you need to get those filed or you will not be getting the check. So that's kind of one of the takeaways here.
Awesome. That's really clear. So yeah, I already saw a couple people from that. They said, do I need to file in order to get this? So there's your answer. You need to have filed either last year or this year. So if you haven't, go ahead and do it. Cool.
So I see a question from Tammy, and let me go ahead and take that one because it relates to the stimulus topic, if that's okay, Hako.
Great.
And she's asking regarding the stimulus check, what if you can be claimed as a dependent and you checked that box, but no one actually claimed you as a dependent, will you get the check? And the answer is no, you will not, because you check the box that you can be claimed as a dependent on someone else's return. And the way that the CARES Act, which is the legislation that created these stimulus payments, the way it's worded is if you can be claimed as a dependent on someone else's return, you don't get the check. So if you did that on 18, my encouragement to you would be file 19 quick. If you did that on 19, then have a discussion with the person who might be claiming you, and you could think about an amended return if that's appropriate. But, this gets into question of who really should have that dependency. But the bottom line is, if you check the box that says you can be claimed as a dependent on someone else's return, you're not going to get the stimulus check. So sorry to give you the answer you did not want, Tammy, but that's the law.
Awesome. That's great.
Yeah. So the next question is, well, what if I didn't file 18 or 19, but I also didn't have any income in? I just started working in 2020. We could have someone who's in that scenario. And actually, what you need to do then is actually file your 19 return immediately that shows that you had no income. And the IRS today put on their website a place to go do this for free. Like literally this morning, this went live. So you can go to irs.gov/coronavirus, and you can actually file what we call a zero return or a no income return. What it will do is it will put $1 of interest in there, and then it'll file that return. It's completely free, and you can file that return, put your direct deposit info, and you will get the rebate. So we probably don't have too many people, Hako, that would be in that category, but we may have one or two.
Yeah, I agree with that. Cool.
So, the other question is, hey, Knox, am I going to get this check one time, or am I going to get this check like every month for the rest of my life? Well, guess what? You're not going to get it every month for the rest of your life, right? So this is a one-time payment. Could Congress possibly authorize additional payments in the future? I don't have a crystal ball, but the way the law currently is we're going to get the stimulus payment the one time. So it would require basically, literally, an act of Congress in order to authorize additional money. And the next question is, when's it coming, right? Everybody wants to know that. Hey, I'm just out of curiosity, if anyone has already received their money, would you put that into the chat and let us know? Because the first payments actually went out yesterday, which means that there are some people who got it in their account today. In fact, 50 million Americans, their payments were released last night. And so that's the answer for a lot of people is that they got it last night. Next week, they'll be issuing about an equal number. And then if you did not have direct deposit information on file for 18 or 19, and you're going to need a check, then it's not going to be till towards the end of the month that those go out. Part of the problem that the IRS is having right now is that everyone is teleworking just about. Everyone's working from home. So there's an issue of literally people there to stuff the envelopes to put the checks out. And so that's part of the slowdown on the physical check. So if there is, the ability to have direct deposit, you're going to get it a lot quicker. That's the bottom line. Hako, are there any other questions about the checks before we move on?
Let's see. Not any that I see right now. There's a few more that I saw in the RSVP questions, but we can get to those after, because I know there's
okay.
So yeah.
So I'm starting to see some questions about unemployment. So maybe we should go there next. Is that all right?
Let's do it. Yeah, I know that's a topic that's pretty hot right now.
Cool. So, a question here is who qualifies, right? Well, you qualify for the expanded unemployment if you get sick. So part of what I'm hearing from people all over the gig economy, whether it's Uber or Lyft or, Dashers, whatever the case may be, is a fear, frankly, a feeling like I may be more at risk than the average person, because in the case of Uber or Lyft, I don't know who's getting in my car. In the case of dashing, I'm walking into, or even if I'm doing curbside, I'm encountering people at the restaurants. I'm encountering people while I deliver. I'm touching the credit cards, touching the money, whatever the case may be. And so, there is some sense of, I could get this thing. I could get sick. I am out and about in the public. So if you get sick, then you will qualify for unemployment automatically in most states. And this is through the expanded coronavirus unemployment that the feds have authorized. So that's the good news. The other thing is that if you have a family member who is sick and you need to take care of them, then that's going to help you to qualify. Also, if you happen to have to take care of a child because the schools are closed, which has happened all across the country just about, and you're not able to go and work as much, you could qualify for unemployment in many states right now if dashing in your area shuts down. So this hasn't happened to my knowledge very much, but if we get to the point where the government decides, hey, we're just going to completely shut it down, then you would qualify for unemployment in that scenario as well. And then the other thing is, if you're in one of the higher risk categories, either because of age or some sort of underlying medical condition, and you don't feel safe doing it, then you can also qualify if you're in one of those higher risk categories to say, hey, this is a job that I just don't feel like I can do in the midst of this. And that will actually qualify you for unemployment right now, which of course normally it would not. So that's kind of good news. So how much are you going to get? Everybody wants to know about that, right? So remember, it's if you get sick, but how much are you going to get? The short answer is whatever the state normally provides you, plus potentially $600 a week, which is pretty significant. And so that's sort of the federal supplement, is that $600 a week. Now the state has to buy into that, meaning the state has to accept that money and administer that money. And some of them haven't completely turned that on yet. Most of them are in process or have just started this week. So be aware of that. So if you were turned down before, it may make sense to go and do it again. And in terms of how long you can qualify, in the covered period, first of all, for nothing before January 27th, obviously, and hardly anybody was impacted then, but through the end of the year, potentially. But that additional $600 is only available through July 31. So just be aware of that. That's only available through July 31. And you cannot have more than 39 weeks as a result of the coronavirus unemployment. So be aware of that too. Obviously, figuring out those exact calculations are beyond my scope, because it's going to vary from state to state and different localities, right? But bottom line is it's basically whatever the state is plus $600 a week. So pretty significant and can be very, very helpful if you're in a place. And it's extended not only to include nonprofits and government entities, but also self-employed persons, which we all qualify as members of the gig economy. So pretty good stuff here. And Hako, are there any other questions that have come in on unemployment that we want to talk about?
Yes. So I actually want to take control of the screen 1 second just to show something.
Sure, go for it.
Oh, and actually you can see everything there. Cool, that's fine. Okay, now we go. Now you can see it. So some people ask, where do I go to the unemployment website? So actually, as Knox said, it's state by state. So we compiled a list of these on our own website. So if you go to everlance.com/COVID-19 info center, I pasted that in the chat, and you scroll to the bottom, you can actually see the websites for all the states. So let's go to California. That will actually take you over to the California page. And from here is where you can actually apply. Same thing for any other state. And then if you don't see your state here, if you live in a state that we didn't list, you actually can just go to other states and find it right there. So you can get all 50 states here. So that's great. Now the next thing, and Knox, I'll turn the sharing back to you, is Knox, as you know, DoorDash and Caviar have launched an awesome program, which is basically paid sick leave, right? If you're sick because of the virus or a family member sick and you have to take work off, they'll pay your normal income for 2 weeks. That kind of sounds like unemployment too. So are you able to do both at the same time, or how does that work?
Yeah, so that's a great question. And somehow, there we go. I had lost for a moment my control, but I'm getting it back. So it went to another screen on me. It moved. That's okay. That's the danger of 4 screens, right? So I'm sorry, ask the question again, Hako.
Yeah, so the question is, so DoorDash and Caviar are offering 2 weeks of paid sick leave. Can I do both? Can I do that and unemployment at the same time?
Yeah, so you cannot double dip. So you can't do them at the same time. So what you want to do is let the paid sick leave run first, and then you can move into the unemployment. But there's also an expanded Family Medical Leave Act that you might qualify for if you have a kid at home. So touch base with them about that. And that would only come into play if you had a kid at home. And so just be aware of that. But yeah, there could be an option there. But yeah, as soon as your benefits run out from DoorDash or Caviar, whatever the case may be, then you would want to go for unemployment, not before, because you cannot double dip, and it would actually prevent you from receiving. Could it prevent you from receiving either if you're not careful?
A couple more questions, Knox.
Sure.
So forgive me if I butcher this name. Shomara asks, can you qualify for unemployment if you haven't paid taxes? Maybe you already covered this, but just to be clear.
Yes, is the short answer. Unemployment and the taxes are fairly unrelated. Now, I say that with a caveat. This varies a little bit from state to state. So it's not going to impact on a federal level, but there could be a state requirement that you end up having to file. And so be aware of that.
Okay, cool. And then going down quickly, another question from Eli. He said, or she, I was quarantined for 2 weeks to be monitored for COVID with my family. My 2 weeks are up, but could I file unemployment for that time? So can you file unemployment retroactively?
That's a great question. And that too is going to vary from state to state. And in most states, the answer is yes, but the covered period may vary from state to state. So for example, there are several states that did a covered period beginning on April 1, and there are several states that did a covered period going all the way back to January 27th and kind of everywhere in between. So some of that is going to depend on when the covered period is. So go ahead and file. Tell them the beginning thing and work with the unemployment officer that you're working with to help you with that. But you may very well be able to do that. The other thing is, if you were in that guaranteed quarantine, you should qualify for the paid sick leave. So the very first thing I would do is reach out to DoorDash or Caviar in that case to get those couple of weeks covered there. That's the first thing I would do, and then file for unemployment.
Okay, that makes sense. Cool. Let's keep going.
Awesome. So we kind of talked about the how long here, right? And moving to our next thing, I want to move to start talking about, there's all kinds of news on the internet, right? About how you're going to get a free 10 grand. Anybody else heard about that other than me? And I'm curious, just put in the chat real quick. Has anybody gone out there and applied for the free 10 grand? And then follow that up with, if you did, has anybody gotten the free 10 grand? I already know the answer, by the way, but has anybody actually gotten the free 10 grand? And I can guarantee you the answer to that is no. No one has actually gotten a free 10 grand, right? So this goes back to the old adage, if it sounds too good to be true, it probably is. Anybody ever heard that before? You're not going to get a free 10 grand. Sorry to burst your bubble. That's just not the way that it works. And so I want to talk about the reality of what is happening and what can happen here. And then maybe that'll be helpful, Hako, and then we can answer specific questions. Is that an okay way to go through it?
That sounds terrific, Knox, because I know, I follow a lot of news related to independent contractors, and I've been seeing a ton of stuff, like, hey, small businesses can get a free 10 grand, and like I see all these videos on YouTube that are like, get your 10 grand now with like a big,
but pay me $2,500 to help you, right? Have you seen those?
I haven't even gone into that part. I just saw the
The scammers are in abundance, unfortunately.
Right.
Yeah.
We know that scammers, and when times are tough, people do desperate things, people get taken advantage of. So that's why we want to break this down. That's why I feel really lucky to have Knox here with us to really give us this straight, like it's actually written in the law, so that you don't fall for some of these scams.
Yeah, so I'm one of those strange people that actually reads the laws, right? And I have read the law. And the bottom line is it was kind of originally sold as a 10 grand loan for all, right? So, or a grant, actually. It was sold as like this big 10 grand. Everybody's going to get it. Oh, and by the way, you're going to get it within 3 days. Anybody else ever hear that? And there's nobody in this room that has gotten that, because that's not the reality. So the reality is you can get $1,000 per employee as a grant. That's the reality. So if you have employees, which is pretty much nobody here, except for me and Hako a little bit, but basically nobody else has employees, right? So if you have employees, then you can go apply for this, and you're going to get $1,000 per employee up to 10 grand. But that reality is that's not going to apply for the average person out there, right? This is not going to apply for most of us on this call. You can get $1,000 per employee, and you can get that $1,000 as a self-employed person. And I will give you the URL to apply for that. But you're looking at 30 to 45 days before you even see that $1,000, okay? So be aware of that, and that's going to max out at $1,000. And when you do that, you're going to put in that you own the business, you're self-employed, and you have one employee, which is you, basically. There's been overwhelming demand. So there was, and I'm not going to use real numbers here, but I'm going to make it real simple, right? So there were 10 apples worth of money that were put into this pot, and there were 300 people that are all bobbing for the 10 apples. Any of you as kids ever done the whole apple bobbing thing? I think we We decided that was kind of gross now, but when I was a kid, we used to do that. We used to bob for apples at carnivals and stuff. And, it's like 300 kids bobbing for 10 apples. So that's kind of the reality of what is happening. There's overwhelming demand. Congress is already talking about putting more money into it. But the SBA, that's the Small Business Administration that's administering this, is at a loss for how they are supposed to give 300, and again, these are not real numbers, but 300 people pieces of 10 apples. And so that's part of the problem, but you could get $1,000 if you apply for that. And there's the URL if you want to do that. You can just go to sba.gov and apply for that. But be careful, because in the process, you're actually applying for an economic injury disaster loan as well. And you don't need that unless you just want to take out a loan, which you would have to have good credit for, by the way, and then you would have to pay back. And I am not one who encourages people to take on debt when they don't have to do so. So, and I think Hako would say the same thing. So in general, I'm not going to encourage you to go out there and take out these loans, even though the news media is all about them, because as a self-employed person, it's not going to be free money, which is what it's all touted to be. It's going to be a loan that you have to pay back. So there's basically these three primary options that are being talked about.
Ask you a
Go ahead, Hako.
So, just to simplify real quickly, for the 1,000, which is a grant, it does not need to be paid back. Is there a way to apply for that without also applying for a loan?
No. Isn't our government great?
Oh, man.
Now, you don't have to take the loan when they come back and offer it, right?
Oh.
But it's the same application.
Okay, so I apply, they send me back like, hey, we can give you $1,000 for free, and we can give you, $3,000 with, like 5% interest, I can say I only want to take the 1,000.
Correct.
Okay, so that's great. So that suggests to me that it's a good idea for everyone to try to apply, but be careful, right? Because you might forget by the time you get the letter from the IRS, it might say, hey, here's 1,000, here's 3,000, and you might say, sure, give it all to me. You might forget that you actually need to pay back. So that's why, Knox is saying, be careful anytime you're getting money, from any sort of entity like this. Be careful that you're not getting into a loan that's going to get you in a hole. So if you do it carefully, it could be $1,000 of free money, but be aware. Cool.
Yeah. So, there's this quick up to $10,000 emergency grant that's kind of being touted out there. We already kind of debunked that, right? So you're not going to get the 10,000. It would be 1,000 that you would get, and it's not super quick. It's going to be like 30 to 45 days. It's not the 3 days that the media is out there harping about. You don't know anybody who got it in 3 days, and I don't either. And I know a lot of people. So, it just doesn't happen. The second one is the economic injury disaster loan, and that's what we kind of talked about. It would be at 3.75%, but you do have to credit qualify. You do have to pay it back, and there is not a forgiveness or grant aspect to this. This is a loan. I do not encourage you to take this unless you absolutely must. Now, one of the beautiful things about dashing is that actually dashing has increased in most areas of the country, right? Tons of people are at home. Tons of people are wanting delivery. And so actually a lot of dashers that I know are doing pretty well right now, depending on where in the country they are. So some dashers are doing great. And if you don't need a loan, do not go out and take a loan. Don't go out and take debt just because you can, right? That's a recipe for financial ruin down the road, in my opinion. So I am not a person who likes debt. I like to be debt-free personally. I think that's the best way to be if you can. And so I want to see you get out of debt. I want to see you work hard to pay yourself and not work hard to pay a big bank. My personal opinion, you get a little bit of Knox there. And then the third option is the payroll protection program, or what people are calling the PPP. And this is being touted as a bunch of free money too. And it can be actually for businesses with employees. But for self-employed persons, although you are eligible to take these loans out, and I could help you do that, and the terms on these are 24 months and 1%. with a 6-month deferral too. So 24 months and 1%, great interest rate, but you're going to have to pay it back pretty quickly within 24 months, within 2 years. But again, I don't think you're going to get much of this forgiven, because what you have to show to get it forgiven is your payroll. You don't have payroll. You're self-employed, right? So unless you're employing a bunch of other people, which Dashers are not, Uber people are not, Lyft people are not, Caviar is not, that's not really what we're doing in this part of the gig economy. So this loan is really more for the restaurant, for the retail shop, for the places that have employees and able to bring them back into their business. So that's what this loan is really all about. You can technically qualify as a self-employed person. You're going to present your Schedule C from your last tax return, and you're going to present your bank statements, and you're going to show what your net income is, and you can get you're going to divide that by, anyway, it's a complex calculation, but you're going to get a percentage of your income basically in the form of a loan, and you can do that. But again, I don't think much of that is going to be forgiven for most of you. So just want to kind of help you to process what some of these realities really are, because I don't want to see you get stuck thinking you got a bunch of free money that is not reality for you. The good news, however, is you are a Dasher or you're doing Caviar. You're in a portion of the gig economy that's actually doing really well right now. That's not true for the entire gig economy, right? But for Dashers and for Caviar, this is actually a segment of the economy that is still working. And there are not a lot of segments of the economy that are working. And so you can feel really, really blessed by that. Did we have any other questions on this, Hako?
I actually wasn't looking too much. I was preparing a couple of resources for after to send to everyone.
Okay.
Yeah. But let's take I actually haven't seen many. Only one question since I looked, and not even about that. So yeah, I think we're pretty good.
Cool.
I reiterate, super thankful, Knox, that you're sort of looking out for people here and letting them know this is most likely not going to be free money. There's likely going to be a majority loan component. So be careful. So I think that's really good. And I know a lot of people that use Everlance, a lot of people that Dash, or people who want to take control of their finances, people that want to be organized, and in control of their financial life. So I think that's exactly the sort of advice that the people on this call are already trying to do in their own life.
Yeah. So I want to talk about the intent of the payroll protection program real quick, just to help you to understand why I say what I'm saying. So the intent of the payroll protection program is to keep employees on payroll and to rehire employees that have been laid off, and to pay for specific expenses that will keep the business doors open, like rent, utilities, and mortgage insurance in these brick and mortar locations like a restaurant or that kind of thing. And the intent is the key to forgiveness. So if you're not able to actually meet the intent, you're not going to get the forgiveness, right? And so even though you might qualify to get the loan, if you cannot meet the intent, then you're not going to get the forgiveness. And so that's why I say you're going to end up having to pay the vast majority of this back, I think, for most of you. And that's what we want to be careful about.
Dashers do, right? Most of these things don't seem like part of a Dasher's business, right? Having payroll expenses to keep the doors open, like rent, utilities. So yeah, I think that's totally right. Appreciate that.
Cool. So I think, Hako, we're ready to kind of move into the next phase, but did you want to share anything before we do that?
Maybe I'll share. Actually, no, I already went to that website that we compiled with a bunch of resources. Actually, my teammate who led a lot of that is on this, Ashkan, as well. So yeah, we'll share that at the end of the presentation as well. If you want to look at any of the links related to some of these things, unemployment, the $1,000 grant, things like that, paid sick leave, that's all there. But now we're gonna move into some of the basic things related to taxes as a DoorDasher or as a Caviar courier, and we're gonna do it a little bit more condensed than usual so that we can still finish this at the top of the hour. And actually, we don't have this here, but now that we're moving to taxes, right? We're used to having April 15th as tax day, right? A lot of you normally would be scrambling right now to do your taxes. But as you probably heard, that's been moved in every state. So let's just start real quickly, Knox, by reviewing high level the new tax deadline. And I can just say from my side that the federal deadline has been officially moved to July 15th. And for the state deadline, right, because normally you file state taxes and federal taxes, I believe that 40 states now have moved it as well to July 15th. And we have that posted on that website that I shared. For the 10 other states, it's different. Some of them are June, some of them are July. And I can actually, while Knox is talking, I'll look up what those states are.
Yeah. So I want to also mention estimated payments because, one of the things that we encourage people to do when you are self-employed and you're actually profitable is to make estimated payments, because as an independent contractor, you get a 1099 as opposed to an employee who gets a W-2, right? So when you're an employee, you are not your own boss. You're working for somebody else. But when you're an independent contractor, you are your own boss and you set your own hours. But the downside of being an independent contractor, and there are some upsides, and we're going to talk about those in a minute, but the downsides of being an independent contractor is that your employer is not taking taxes out of every check and sending them to the government. So you are expected to do that yourself. And we do that through a process called estimated payments, or we sort of estimate on a quarterly basis, okay, this is the amount I make, so I'm going to take a percentage of that, and I'm going to send that to the Fed, and I'm going to take a percentage of that, and I'm going to send that to the state. And actually, Everlance has a great tool that will help you to sort of keep track of that and automatically do that. I'm sure Hako will be happy to show you that here in just a minute. Well, normally, we have that first quarterly payment due on April 15th. And the second quarterly payment is normally due on June 15th. Well, the interesting thing this year is we've extended the federal 1040 or the federal individual income tax deadline until July 15th. So are we going to have those estimated quarterly payments due at the normal times? And the answer to that is no. So at the federal level, let me stress that because the states are a little different, like Hako said, in some cases. But at the federal level, the first quarter, that April 15th, is now July 15th. Now, it was kind of weird because when the IRS moved that, they kind of forgot about the June 15th deadline. And so June 15th was still June 15th until yesterday. And actually yesterday, the IRS extended June 15th to July 15th as well. So both the first quarter and second quarter estimated payments are also going to be July 15th. Now, some of the states have likewise moved the estimated payments, and some of them have not. That's the reality. Now let me move to Knox's suggestion to you. My suggestion to you is if you are doing well right now and you're not feeling a ton of impact from this, like a lot of Dashers, you're able to still be working a lot. Some of you are actually doing better in this environment than you were before. Still make those estimated payments. Because the last thing you want to do is get to July 15 and have to pay for like half the year and you forgot to put anything aside, right? So my encouragement to you is if you are planning on, if you're a person who knows you need to make estimated payments because you know you're going to owe, then go ahead and do that normally. And we'll talk more in a minute about how to know whether you're going to owe or not and some of those things, Hako. But I just wanted to kind of mention that as we were talking about these deadlines, that can be a pretty big deal, to know what to do there. So we kind of actually already talked through this, the employee versus independent contractor thing here. But as an employee on a W-2, then they are taking your taxes out. As an independent contractor, they're not. But the good news is that as an independent contractor, there are expenses that you can deduct that you cannot deduct as an employee, right? So there's a lot of things that you can deduct. And this is where Everlance comes in super helpful on the car expenses, right? So you can track all of your mileage and you can track a lot of other car expenses too. And I think Hako's going to show you a page here in a minute that probably helps you to break that down.
For sure. And just to say one thing on the estimated taxes.
Sure.
I think a lot of people on this call are probably not familiar with them. Even though you're all independent contractors, we only see that a minority, a small handful of independent contractors actually pay their estimated taxes when they are doing gig economy jobs. Because so, an accountant like Knox will say like, you should do it, right? And the government will say you should do it. But I'm just giving you the reality is most of you probably don't, right? And you actually don't get penalized unless you end up owing more than $1,000, or something like that. So we think it's a great idea to at least put aside money for taxes, even if you're not paying them quarterly. And we have a product that we developed around that called Tax Vault. If you download Everlance, you can see that, and I can show that a little bit later. But I just wanted to basically say, like, don't freak out if you're not paying estimated taxes. Like, just know that most other people probably are not either, and that's like, I'm not saying that's like okay or not, but it's just a reality. But it is a good idea to save for those taxes. Cool. So I just wanted to say that. And then, yeah, I do know a lot of people in the chat and in the RSVP questions have asked, how do I pay less on taxes, right? Like that's kind of getting back to the bread and butter, away from COVID, just in general, how do I pay less in taxes? The biggest thing is to write off, deduct as many things as possible, as you probably all know. And if you're a Dasher, the biggest thing you can deduct is your mileage. So that's what's cool about Everlance is you just get the app once, you download it, it tracks all your miles, and then you submit that to your CPA or to your tax software, and it multiplies. Hey, you drove 10,000 miles, multiplies it times this rate, and you deduct. You lower your bill, and you don't have to keep track of gas, oil expenses, all these sort of things. You just keep track of mileage. That's kind of cool. So, anyways, that's how that works. And what are the other big expenses, Knox, so we can deduct?
Yeah, so a lot of people forget about this one, right? But you have to have a phone in order to be a Dasher. You cannot do your work without a smartphone, right? Which means that it is a ordinary and necessary business expense. And so you can deduct a portion at least of buying your phone bill, chargers, car mounts, all of that stuff. Now, what you cannot do is deduct like your whole family plan for yourself, your spouse, and 3 kids, right? You can't get away with that. So, you have to figure out, okay, which portion of this is actually related to the business. So we'll just take that example I just mentioned. That's 5 people on the family plan, and you are one of those 5 people. 1 out of 5 is 20%, right? So you're only going to claim your portion of that. Now, if you're pretty much a full-time Dasher, you're going to claim that whole thing. If you are kind of splitting what you're using that phone for between multiple things, so you're kind of dashing on the side, this is a side gig, that kind of thing, then you're going to take a percentage and you're going to figure out, okay, what percentage am I actually using this phone for dashing? And then you're going to take that percentage of your percentage of the family, right? So it's not that complex, but you just have to sort of think from a common sense perspective, and a tax professional can help you think through all this, obviously, but you want to think from a common sense perspective. Is the IRS going to let me deduct my kid's cell phone expense? They're probably not going to call that related to my business, right? Is the IRS going to let me deduct my spouse's expense? Well, that depends. Is my spouse also doing DoorDashing? Are we doing that together? Then if so, the answer is yes. But if not, then no, I can only deduct my own, right? So you have to kind of pay attention. Hako's sending us some sort of something here. But
I'm just trying to copy and paste a different message, and it's pasting a picture of our tax vault, so it's not too unrelated.
Okay, so it wasn't porn or anything. So that's good.
I'm not Zoom bombing here.
All right, cool. Anyway, bottom line is there's a lot of common sense to this. So if you need help with that, then talk to a tax professional, ask us questions. We can certainly help you walk through that, but you can deduct some of that. Inspections. So if they're required by your state, for example, California is a biggie, right? And they require some inspections to be done, or if they're required by DoorDash in order to do your job, then you can deduct those things. And there's some other examples here too. So like, even if you're taking a mileage expense, you also want to keep track of your tolls, because you can deduct those tolls even on top of your mileage expense. If you are self-employed only and you do not have another job, then you can actually deduct your health insurance. We call that a self-employed health insurance adjustment. roadside assistance or something like that. I won't mention AAA that's on the slide, but it could be any of those roadside assistances that are out there. I know I have mine actually through my insurance company. So we have USAA because I'm not a vet, but my wife is. And so we have USAA and they provide a roadside assistance. It doesn't have to be AAA, can be any other, but roadside assistance to sort of keep you going. That's required that you are able to keep going while you're working. Parking, if you have to pay parking anywhere, that's another thing that qualifies on top of your standard mileage deduction. Tools of your trade. I've got to have insulated bags, for example, and I have to buy those. Or I'm going to have blankets to keep my food hot or cold, or whatever the case may be. I'm in Southwest Virginia, where if you don't like the weather, you just go to sleep and it'll be different the next day. So it was like 76 here yesterday. I woke up this morning and it was snowing. So, you never know. So I don't know if you live in an area like that or not, but you have to think about, what are the expenses that I have? And if it's an expense that I have because of my business, because of my dashing, because of my, whatever self-employed expense business I'm in, then that's going to be something I can potentially deduct. So you want to start thinking, what are the things that I have that enable me to do my business? I have to have a cell phone, deduction. I have to have a charger in my car because I'm in my car all the time, deduction. Hey, Anna, I'm actually in Radford, if you know where that is. So you're on the beach where it's a little more fun. I'm in Radford. But the good news is we don't have as many cases as you do. So anyway, so, it's one of the, that was in poor taste. I was like, I cannot believe he just said that. But anyway, the bottom line is if it relates to your business, then you can think about deducting it. There's a lot of common sense that is involved here. And actually DoorDash has a pretty good tool to help us do that too. But the bottom line is, taxes can be a little complicated, but being an independent contractor makes it more complicated, and there's good and bad to that. The bad, oh my gosh, it's more complicated. But the good of that is, part of why it's more complicated is there are more things that you can deduct. And so you're your own boss. You own your business. You're going to file a business tax form with your regular tax return. It's called a Schedule C. You don't have to file some different tax return. You file your normal tax return, and you include a Schedule C that shows your business income and your business expenses. So it's not too bad. Don't let it spook you too much. I do want to talk a little bit about car expenses because this is a common question. On the Schedule C, it's going to ask you, when did you place your vehicle in service for business purposes? And tons of people get really confused by this question. Don't let it confuse you too much. But the short answer here is whenever you placed your car, your vehicle in service for whatever business it is you're doing. So I started dashing, for example, June 1st of 2019. That's going to be the date. I started dashing February 1st of 2020. That's going to be the date, though hopefully not on my 2019 return. Whatever the date is that you started using that particular vehicle in your business, that is the date that you want to put there. So I hope that kind of helps to clarify that a little bit. And Hako, there's a couple of different ways that we can claim mileage, right? There's the standard mileage deduction that I've been talking about some, but there's also an actual vehicle expense method. And we're going to kind of compare those two. For most of you, not for most of you, for all of you, what is easier is the standard mileage method or the standard mileage deduction. And that is generally what I recommend. There are very few cases where as a dasher, you're going to come out better with the actual vehicle expense method. And so you're going to mostly want to pay attention to that one. But let me kind of show you a breakdown of the difference. For 2019, it was 58 cents a mile. It's actually 57.5 for 2020. And we put the 2018 on there too, in case some of you are working on your 2018 return, which I know some of you do need to do that still. But you don't have to keep receipts in this scenario. So one of the questions I saw in the chat was, do I have to keep all of my receipts for this kind of stuff? You don't have to keep your receipts for the standard rate, for the standard mileage deduction. In fact, Everlance is going to give you everything you need to be able to do that, which is great. The actual expense method, on the other hand, you do have to keep your receipts. So don't forget that. In this case, you're going to keep your receipts for all gas, for car payments, insurance, repairs. You're going to calculate the percentage of your personal use versus your business use, and then we're going to multiply that out. So let's kind of look at what that looks like. We're just going to take an example person. This example person drove 3,680 miles, so not a ton. So maybe they only worked a couple months. We're going to multiply that times 58 cents, which was the 2019 rate, and we're going to get $2,134.40. So that's our standard deduction. Now, on the actual expenses, total car expenses in 2019 were $1,750. They drove $3,680 for business, $4,680 for personal. So we're going to add the $3,680 and the $4,680 together to get our total mileage, which is $8,360. And then we're going to divide the business mileage by that total mileage to get our business usage percentage. So in this case, roughly 44%. We multiply our total expense by that roughly 44%, and you can see that our deduction here is $770.30. Now we're simplifying this a little bit. I'm not factoring in depreciation and those things necessarily, walking through how to do that. But the bottom line is we're a whole lot better off with the standard method 99% of the time. And so you want to be aware of that. Both methods, by the way, require you to keep track of your miles, and a lot of people get confused about that. But you have to be able to prove your business usage percentage, and the only way you can do that is if you logged your miles, right? So you have to keep track of your miles in either scenario. I think, Heiko, a lot of people get confused about that.
Absolutely. Yeah. As you were talking, Knox, I was also looking at some of the questions people were asking in the RCP, and a couple questions were, I'm tracking with Everlance. What do I do with those numbers? Those like total miles tracked by Everlance. What do I do with that? So, the short answer is you want to figure out what was the total for the year. So you just export a report for the whole year. It's like, oh, cool. You drove 3,700 miles in 2019. So you're going to put that number into your what's called the Schedule C, which Knox already talked about. So when you use tax software and you say, hey, I'm an independent contractor, it'll ask you how much did you drive? You put that in there. If you use an accountant, you tell them this was the amount. And if they ask you, did you record your miles? Yes, I used Everlance, and I have this report here. So if the IRS ever audits you, you're covered. So that's basically that answer.
And just to back up a little bit from that, as you're driving, at the end of the day, or some people do it weekly, some people do it after each drive, whatever, you need to swipe. So tell them kind of how they swipe, whether it's business or personal.
Absolutely. Yeah. So the app is going to track all your miles, whether you're taking your kid to school or whether you're delivering, Chinese takeout to someone's house for DoorDash. So you need to tell the app what was work and what was personal. If it's work, you swipe to the right. If it's personal, you swipe to the left. What's cool is that, say maybe you work pretty even hours, like maybe you only like dashing during lunchtime on Fridays and Thursdays, then you can tell the app only during those hours, record everything as work. And that saves you a lot of time because you don't have to do the swipes yourself. And that's called work hours. So yeah, let's also another thing that I wanted to say on the business expenses, if we, go up a little bit, a couple of slides, and like all these other, things that you can be deducting throughout the year. One of like my big pieces of advice, if you want to get your biggest deduction, is don't just think about what are your deductions when you're going to file your taxes, because you're going to forget things, and your documentation is not going to be as good. So if you ever get audited, you're going to be scrambling. So like what we see as the most organized people who are the most on top of their taxes, they are sort of thinking about this throughout the year. Like anytime they're making an expense, they're like, is this for my business? Oh yeah, it is. Okay. So let me write this down somewhere. Like back in the day, you would keep it in a notebook and you would put the receipt in there. Now you can use an app like Everlance to take a picture or to connect your bank and just say, oh yeah, let me swipe to the right. But the point is, no matter what the method is, if you're sort of thinking about this throughout the year and always sort of thinking, hey, is this for my business? Let me document this somewhere. At the end of the year, you're going to end up saving a lot more money. So that's a big tip. Cool. All right. Let's see. Oh yeah, and I do still see a bunch of questions about the 1099, right? So a lot of people are asking, when will I get my 1099? So hopefully most of you already got yours. I'd be curious if you want to throw in the chat right now, just say like no if you didn't get it. I'd be curious how many people don't have their 1099 yet. You should already have received it by email from DoorDash or Caviar. So check your email, check your spam. Um, if you didn't receive it by email, then you should have it. You should have had it mailed to you. Um, if that's not the case as well, try logging on to payable.com. I can put the link here. Yeah.
Yeah,
So
and just to clarify, if you've only driven in 2019, you're not going to have a 2019 1099. I mean, if you only driven in 2020. So, you're not going to, the 1099 is for the previous year.
right,
So I see a couple of people saying, hey, I just started driving, but I didn't get my 1099. Where do I get it? You're not, because it's for the previous year. So if you just started driving in 2020, you will get one for next year. You'll get it next January in 2021, but you're not going to get one for 2019 now.
exactly. So I only see a couple of no's. So it seems like most people actually do have it. So that makes me feel good that we're covered there. And it's the same thing for Caviar. So cool. I think we can keep moving on then, because we're near the top of the hour, and yeah, and you're only gonna get one if you made over $600. So if you made less than $600 in 2019, you you would not get a 1099, but you still need to pay taxes.
Right. You still report it, but you know how much you made, right? Or get a report that you can pull down.
Exactly. You can see that in the Dasher app.
Yep. So let's talk briefly about this. So most of us have worked W-2 at some point in our lives, and we kind of got a refund, and we're used to that, especially if we have kids, right? If you DoorDash, only DoorDash or other 1099 jobs, then like we talked about earlier, there's no money coming out. So it could go either way though, because if you have a bunch of kids and you qualify for like child tax credit, earned income credit, those kinds of things, you could have those credits actually out or offset, I guess is a better way to say it, the taxes that you're going to owe. So it could go either way, depending on how much you dashed, how much you're able to deduct, and how many of those credits. But if you're by yourself, you don't really have any kids, and you are solely doing dashing, that kind of thing, you're going to owe almost for sure. If you're kind of combined where you have a W-2 job, but you're doing DoorDash kind of as a side gig, then that could go either way. It's going to depend on that percentage, right? It's going to depend on how much you're doing of each. So you kind of have to just track that. After you've done your taxes the first year of doing it, then you're obviously going to have a much better idea. But for most people, they're going to need to set aside a percentage of their income in order to pay their taxes along the way for most people. And actually, do you want to show them your tool for that real quick, Paco?
Yeah. All right. So now you guys can see what that secret picture that I was sending is about. Here we go. Yeah, I should do the whole thing. Okay. So we have this tool called, oh, okay. Sorry, technical difficulties. I'll get it here. All right, cool. This tool called Tax Vault, and you can see it's still in beta. So I'm showing you pictures from my desktop. Basically, it allows you to automatically set aside money for your tax bill. So like Knox was saying, when you used to work a W-2 job, taxes were great because you got money back. But if you're only doing DoorDashing and Uber and things like that, you're most likely going to have to pay if you make over a certain amount. So it's kind of great to put aside money throughout the year. So the way this works is each time you get paid, so you get $100 from DoorDash, we recommend setting 10% for your tax vault, and 10% and 90% is okay to spend. Cool. And you can always edit that. And you just simply put in your first name, last name, and phone number. You also see my phone number there. Feel free to send me a text. And you just link your bank account. So in this case, we use this technology called Plaid. It's what every sort of app out there uses now to connect to bank accounts securely. you put in your info to connect to your bank account, and then boom, now you're in the tax vault. And this was the little picture I was sending, which tells you, hey, in this case, you're all caught up. And what the tax vault is going to do is each time you get paid, it's going to automatically set aside that money. If you fall behind, it's going to remind you, hey, you're starting to fall behind for your tax bill. You may want to catch up. So that's basically how that works. And right now it's only available for iOS, for iPhones. If you have an Android, hopefully we'll have that for you soon. Let us know if you're interested in that in the chat or somewhere else. That'll help us to prioritize it, hopefully. So yeah, back to you, Knox, on the screen. And this time you didn't lose it, but we did lose your audio.
That's because I'm muted. Sorry about that. So real quickly, just want to mention what kinds of miles can we record? Because I saw a couple of questions about this in there. So basically, obviously, whenever Dasher mode is on, then you want to be recording those miles. But you can also record to and from your home. And this is going to help you out a lot. So, and someone in here asked about what if my home is in Mexico? You want to record basically from the border is the short answer there. And also for taking care of your car. So, I went to get gas. I went to wash my car because that's important. I went, in order to look good for the business, that's required. My maintenance is required. I have to maintain my car. So all of those sorts of miles we can count as business miles. And we definitely want to be aware of that. And Hako, I saw someone ask if we could show a screenshot of how Everlance works. So you want to just talk through this in 10 seconds?
Yeah, for sure. So yeah, it's a little bit small, but you can see here it's, all right, 10 seconds. All right, I'm going to start again. Ready? You can count down for me. On the left screen, these are the trips that have been tracked for you, right? So you can see this is a big trip for 100 miles, and that's worth $60. If it was personal, you would swipe to the left. If it's work, you swipe to the right. And as soon as you swipe, it's claiming that mileage. So basically that's it in 10 seconds.
Awesome. And you want to talk about this?
Yeah. And actually, Knox, can you refresh? Will it come? I think I edited this.
Oh, you did? Okay.
I wanted to throw in some. Yeah, I think if you refresh, it'll be there. Cool. Perfect. So yeah, now you can. So yes, if you want to file your taxes, I know you might wait until July 15th. But by the way, something we didn't really stress is that if you're expecting to get a refund, there's no reason to wait, right? The sooner you can file, the sooner you'll get that money. So if you are sort of lower income, like making underneath 30 to 40,000 with kids, or if you had like a big W-2 job in addition to dashing, you're probably going to get a refund. So you may want to do that soon. And a cool thing too is that if you go to this site on the left, the Credit Karma thing, bit.ly EverCK free, we'll share that. They actually have a little refund estimator. So without actually doing your taxes, they can tell you. And you can file your taxes through there and it's totally free. But I also know that for a lot of people, especially this year with all the questions, but even in general, if you're a dasher and you're new to being a dasher, you're going to have a lot of questions. It can be really nice to talk to someone one-on-one like Knox or someone on his team. So, and it can be hard to find like what's the right CPA for you. So the cool thing is that their program has like they're all really highly qualified CPAs who have a lot of experience working with independent contractors. So I really recommend that option as well. And yeah, there's a link and Knox can tell you a little bit more about it as well.
Yeah, so you just go to gigeconomytaxes.com and basically you sign up to be on my list and then you'll start getting information from me. And you'll also get some information about how to work with us. It does not cost anything to get on our list, but we just start sending you some information whenever new stuff comes out. So the last 2 weeks have been a little crazy. So obviously you can go like months at a time without hearing from me. And then in like the last couple of weeks, you might hear from me 3 or 4 times a week. So it just depends on what's happening out in the real world in terms of gig economy and taxation. But that list is specific for gig economy taxation. And then also, Hako has set up a pretty cool info center here. Do you want to talk about that?
Totally. Yeah, so actually Ashkan, who is on the call too and is answering a bunch of questions in the chat, he was the mastermind of the design and yeah, mastermind behind this info center. So you can check it out at everlance.com/there. We'll send this all in links that you can easily click afterwards. And you can see a bunch of good things there. And then there's also, we're resharing the link for if you want to do the $1,000 grant, but be really careful that you don't also get a loan that you don't want to get. So again, we just want to always say that and watch out for you there. And then the other thing is you can go to our what we're calling our tax academy at everlance.com/DD Academy. That's for DoorDash. And there's some pretty cool things there that I'll just show real quick. Yeah, let's do that. Everlance.com/DD Academy. You head over to that, then you'll be able to see, information about the tax deadline changes. So what is it for your individual state? You can get some pretty cool tools for how to maximize your mileage write-off. So it's actually pretty interactive. So it'll ask you, how much did you drive? And based on how much you drove, it'll recommend what the best thing for you is. It'll go through some of the top deductions. So we think these could be some really helpful ways if you're new to dashing or caviar as well. And back to you, Knox.
Cool.
Yeah.
All right. Find my
share
button again. There we go. Yeah. So obviously, he kind of talked about that a little bit. Like I said, you can get updates from me. I kind of already talked through that. We are offering a special for dashers and couriers. If you agree to use Everlance moving forward, then that makes our life easier. And so we will actually knock down your total cost of the return to $200. If you do not agree to use Everlance, it's $250. Both of those are pretty good deals. So just be aware of that. And then obviously there's also the ability to get 3 months free of Everlance. And so that is there.
Well, it's a 6 months during
COVID.
COVID.
6 months.
Yeah.
You sweetened the deal.
Sweeten the deal because we know that we want to appreciate dashers and couriers for all the work they're doing. So if you go to everlance.com/DoorDash or everlance.com/caviar, you can download Everlance through there. And if you and you only got 3 months, you can write into us at support and we'll extend that to 6 months. So that's pretty cool.
Awesome deal. Well, I think we're at our time. Hako, are there any other questions we need to look at or where are we at?
Yeah, maybe let's spend max, 3 to 5 minutes doing like a rapid fire of answers. So if you guys have any final questions that you want to throw into the chat that we didn't answer, I know we weren't able to keep up with all of them, feel free. And yeah, and then we'll just rapid fire those. There's that link. Yeah, I'm also posting a couple of the.
So real quick, while people are asking questions, one of the questions here is, do I need a CPA? So let me take that one real quick. The short answer is, if you are confident, you've done your taxes before and you are confident that you know how to do them, then you don't need a professional. You can do that totally for free on the link that he gave you there. If you feel like you want to talk to a professional, you want the help to maximize your results and know that it's done right, and you want to use a professional, then feel free to reach out to us. But it is not required that you use a professional in any way, shape, or form. Somebody else here, Haka, was asking, I have a single member LLC. What do I do? So single member, and I received the 1099 in the EIN and name of the LLC. Not a problem. Single member LLCs by default also go on the Schedule C. So you're going to treat it exactly the same. Just on the Schedule C, the business name is going to be the name of the LLC, and the EIN for the LLC is going to go on there as well. No problem. Everything else is just the same. It's called a disregarded entity. For single members. So no problem there. Somebody sent me a private message saying, is Everlance deductible? The answer to that is yes. It is deductible. So you're going to get the 6 months free, which is pretty awesome. But yeah, Everlance is totally deductible as well. And Hako, did you see any other questions?
Yes, someone was asking me about if they have a motorcycle that they use for DoorDash, what the rate for that is. So it's a different, so basically there is still a standard rate like with cars, but it's lower, right? Because it's cheaper to operate a motorcycle. I'm seeing here by looking up online that in 2020, it's 54.5 cents. I don't have the rate for 2019. Yeah, potentially Ashkan knows that, or you know it, Knox? Or
So I'm also seeing people asking about bike, and I'm not sure they're asking about a motorcycle. So I want to make sure that I delineate that difference, or that we delineate that difference.
yeah.
So you cannot take the standard mileage deduction for a bicycle. What you can do is actual expenses. So, I had to buy new tires. I had to buy the bike. You can even write off the entire price of the bike if you bought it for your business. Any of your actual expenses you're going to get to deduct there, but you do not get to claim mileage on the bicycle.
Someone
If you
actually asked,
filed last year, go ahead.
someone asked earlier, they bought a $7,000 electric bike. That sounds like a lot. Can they deduct the whole thing?
That is a lot. And the answer to that is you need to talk to a professional, because it depends on your total income and expenses. The answer is a maybe, but it's a more complex answer. It's going to depend on your profit. So you might be able to, and you might be able to deduct 100% of it in the first year, which would be awesome. But again, you probably want to talk to a professional in that case. Someone else is asking, hey, I didn't file last year or this year, and I'm going to owe money for both. What's the best thing to do to proceed? The short answer is you want to file as quickly as possible, because there is a monthly penalty that sort of accumulates there. There is a max on that, but there's a monthly filing penalty, and then there's also a monthly failure to pay penalty. So it's a failure to file, failure to pay. So you want to file as soon as possible. Once you have filed them both and you figure out, hey, I'm going to owe money for both and I don't have that money, then you want to reach out to a professional, someone on our team possibly, and we can help you work out a payment plan to get that taken care of. And actually right now is a great time to do that, because the IRS is giving us super lenient terms on being able to help people out. So definitely, reach out to us or to someone, other professional who can help you with that.
Yeah. I'm still seeing some questions about the stimulus check. I know some people joined late, that sort of thing. We covered that way back at the beginning. So if you're asking, do I need to file my 2019 taxes in order to get my stimulus check? The answer is, if you filed your 2018 taxes, that's fine, right? So in order to get your stimulus check, you need to have your 2018 or 2019 filed. That's kind of the short of it.
Yep. Someone else is asking, what if I'm not the account holder on my family phone plan? Can I still write off some of my personal phone service? The answer to that is yes, if you are paying it, but you can't write it off if you're not paying it. So that's kind of the short answer there.
Yeah. Okay. A bunch of people are asking too, will this be recorded or will it be shared? It has been recorded. It will be shared later today. So yeah, you'll probably get a text or an email for that. Probably both.
Couple of people are asking, how do they contact me? The best thing to do is get on that list at gigeconomytaxes.com, and I will actually send out probably tomorrow the first email to you, which will include our contact information. So,
yeah. So there are so many questions. If I look at the RCP, hundreds actually, won't be able to get to all the rest, but I think we covered the majority of the big ones. I know this is a confusing time and a really tough time for a lot of people. Luckily for Dashers, money can still be coming in pretty well if that's your main source of income and you feel you're safe doing it. But yeah, if we keep sort of finding a lot of interest and having more of these, we can do more. Before we get through the end of this time, and yeah, I think we'll close it off here. Knox, thank you so much for being here again. It's really special to have someone as knowledgeable as you are on this call, giving us firsthand info from these committees.
Cool. Well, thank y'all so much for having me. And, everybody take care of yourself. Stay safe. Can't say that enough right now, I guess. So, just be careful. Do all the things that you need to do to be careful and to take care of yourself health-wise, but also to take care of yourself emotionally and mentally, and also financially. Get your house in order financially, and you will be a happier person moving forward. So thank y'all so much, and glad to be with you.
Awesome. See you, everyone.